So let's talk about gold and silver. For ages, they've been the go-to safe haven when the economy gets a little turbulent. But lately, something's off. They've been falling. Today, we're going to break down exactly why that's happening and what it's telling us about the bigger picture. You know the drill, right? When markets get shaky, when inflation spikes, or there's geopolitical drama, the classic move is to buy gold and silver. They're supposed to be that solid, reliable store of value, the financial anchor in a storm. But here's the thing. That classic playbook just isn't working right now. I mean, despite all the uncertainty out there, the prices of these metals have actually been dropping. It feels completely backwards, doesn't it? And that's the real puzzle we're going to solve today. So that leaves us with this huge question. Why would investors be selling the very assets that are meant to protect them? What forces are out there that are so powerful they can override this age-old financial instinct? Okay, our first and honestly most important clue has everything to do with interest rates. It turns out that right now, the biggest force in the market isn't fear or excitement. It's the simple, steady return you can get from what you might call boring money. And to really get this, we have to talk about something called opportunity cost. It sounds complicated, but it's not. All it means is what you miss out on by making one choice instead of another. It's the financial road not taken. So just picture the choice an investor has right now. On one hand, you can own gold. It's shiny, it's valuable, but it pays you exactly 0% interest. It just sits there. On the other hand, you can take that same cash, put it into something like government bonds, and earn a really solid guaranteed income. And that's the real kicker. When interest rates are high, the cost of not earning that interest, that opportunity cost, becomes really, really expensive. An investor looks at a gold bar and thinks, why on earth would I hold this thing that pays me nothing when I can get a great return somewhere else but basically no risk? All right, let's move on to our second clue, and it's totally connected to the first one, the incredible strength of the US dollar right now. People are calling it King Dollar for a reason. And when the dollar is this strong, it's a huge problem for precious metals. You can actually see the dominoes fall here. It all starts with those high US interest rates. That attracts money from all over the world, which makes the dollar stronger. Now, because gold is priced in dollars everywhere, a stronger dollar just automatically makes gold more expensive for anyone buying with a different currency. And what happens when something gets more expensive? Well, demand weakens, and the price goes down. And it's not just one thing propping up the dollar, it's really a triple threat. You've got those high interest rates we keep talking about, huge demand for US government bonds, and just this general feeling of global uncertainty that's pushing investors into what they see as the safest currency on the block, the dollar. Okay, now let's talk specifically about silver for a minute because it's got its own unique set of problems. It tends to move with gold, sure, but it often falls faster and harder. And the reason why is that silver is kind of living a double life. And this is the key difference you have to understand. Gold is almost purely a financial asset. People buy it to store wealth. But silver, well, silver has a day job. It's a critical industrial metal that's used to actually build things. I mean, think about it. There's silver inside your phone. It's a crucial component in solar panels and electric vehicles. It's used all over the place in manufacturing. So its price isn't just tied to what investors are doing, it's also tied to the health of the entire global economy. So this means silver gets hit from both sides. High interest rates make it less appealing to investors, just like gold. But on top of that, if people start worrying about a global recession, it means factories will be ordering less of it. It's a nasty 1-2 punch that explains why it's been getting hit so hard lately. So beyond interest rates and the dollar, there are a couple of other things that are adding to the pressure. Let's zoom out and look at the bigger picture for a moment. You see, for the last few years, some of the biggest gold buyers in the world have been central banks. But lately, that massive buying spree has started to cool off. And when one of your biggest and most consistent customers decides to take a break, that's definitely going to affect the price. They might be waiting for a better deal or maybe dealing with their own economic issues, but either way, one of gold's biggest supporters is tapping the brakes. And, sometimes the simplest answer is the right one. Gold had a fantastic run. A lot of people who bought it are now sitting on some pretty nice profits. As the economic picture starts to shift, some of them are just deciding, hey, it's probably a good time to cash in and take some of those profits off the table. So after hearing all that, it's totally fair to ask the big question. Has gold just lost its touch? Is its whole identity as a safe haven fundamentally broken? Well, the answer is probably not.
Gold isn't broken. It's actually reacting in a pretty logical way to the very specific and, let's be honest, very weird economic moment that we're all living through.
We're in this kind of in-between phase. Inflation is down from its peak, but it's not totally gone. Interest rates are high, but everybody's expecting them to get cut eventually. And the economy is slowing, but it hasn't completely crashed. Gold really struggles in this kind of limbo, where there's no single clear crisis for it to react to. So this dip in precious metals isn't really a sign that something is broken. It's a sign that the market is just adjusting to this new reality of high rates and a super strong dollar. So the story today might be about falling prices, but the next chapter really begins when this whole picture starts to flip. The real question isn't why are they falling now? It's what happens next.